What's happening with the US economy at present? And what are the future predictions by the International Monetary Fund? This is a question that has puzzled economists, policymakers, and the common man alike. In this discussion, we will be exploring the current state and future prospects of the US economy, a subject that has been garnering attention due to its impressive growth compared to other developed economies. The International Monetary Fund, also known as the IMF, has recently revised its prediction for the growth of the US economy to 2.7% for this year. This is a rise of 0.6 percentage points from its forecast earlier in January. This upward revision reflects how the US is surpassing other developed economies, especially the European economy, which is struggling to regain its stride post-pandemic. High interest rates and the residual effects of prior increases in energy costs have been slowing down European activity. But what factors are behind the striking performance of the US economy? Pierre-Olivier Gourinchas, the IMF's chief economist, believes that it is an amalgamation of strong productivity and employment growth and high demand in an economy that is still overheated. He accentuates that this necessitates a careful and gradual approach to easing by the Federal Reserve. The US economy is not just faring well, it's surpassing its pre-pandemic growth trend, a feat that has been termed as astonishing. Nonetheless, this sharp economic growth, usually incited by a sudden surge in household and government spending, can lead to a rise in inflation, a phenomenon referred to as overheating. So, the US economy is showing encouraging signs of growth, but what are the implications for inflation and interest rates? The IMF's forecast isn't just about numbers, it carries significant implications for the US and the global economy. Let's delve into what this forecast means for our economic landscape. The US economy's robust performance is expected to be a major driving force for global growth this year. The IMF's upgrade of the US economic growth forecast to 2.7% this year, a 0.6 percentage point increase from January's prediction, underscores this optimism. But here's the kicker. This standout performance could potentially intensify America's existing inflation problem. Picture this. When an economy experiences rapid growth, as we're seeing in the US, it often triggers a rise in inflation. This is referred to as an overheated economy. An economy can overheat when there's a sudden surge in household and government spending, and that's exactly the scenario we find ourselves in. This brings us to the question, what's to be done about this potential inflation issue? The IMF's chief economist Pierre-Olivier Gourinchas calls for a cautious and gradual approach to monetary easing by the Federal Reserve. This means that the Fed should be careful about decreasing interest rates too quickly. Lowering rates can stimulate economic growth, yes, but it can also lead to inflation if not managed properly. The US economy's strong performance is indeed commendable, but the potential inflation situation that could arise from it is concerning. The Federal Reserve will need to tread carefully to ensure that our economy doesn't overheat and that inflation remains under control. While the strong growth performance is commendable, it's the impact on inflation that needs watching. How does the US economy's performance stack up against other economies, notably the European economy and emerging markets like China and India? Let's take a look at the International Monetary Fund's forecast. It projects that the US economy will grow at a rate of 2.7% this year. This is a standout figure, especially when compared to other advanced economies. For instance, the European economy, which has been grappling with high interest rates and the lingering effects of earlier rises in energy costs, is expected to grow at a much slower pace of just 0.8% this year. This is a downgrade of 0.1 percentage points from the IMF's January forecast. Moving to the east, the global economy is projected to expand by 3.2%, slightly more than predicted in January. China, the world's second-largest economy, is forecast to grow at a rate of 4.6%. This is significantly slower than the US, but still a respectable figure given the size and complexity of the Chinese economy. Turning our attention to India, this emerging market is expected to notch growth of 6.8%. This is a remarkable figure, especially when compared to the slower growth rates of advanced economies. However, it's worth noting that emerging markets often have higher growth rates due to their lower base and the fact that they're playing catch-up to more developed economies. So, what does this all mean? Well, in terms of pure growth, the US is leading the pack among advanced economies. It's outpacing Europe and even China, which is quite a feat. However, let's not forget that growth isn't the only factor to consider when evaluating an economy's performance. There are other factors like inflation, employment levels, and fiscal and monetary policies that also play crucial roles. The US is certainly leading the pack, but growth isn't the only factor to consider. Growth is good, but it's not without its risks and challenges. What are the potential pitfalls that the US economy might face? As the US economy surges towards growth, it's not just the rosy prospects we need to focus on. There are some significant risks and challenges that lie ahead. The biggest threat comes from the rising inflation, fueled in part by high government spending and debt levels. When the government spends more than it earns, it either borrows or prints more money. Both of these actions can potentially push up inflation, making the cost of living higher for everyone. Now you may be thinking, why doesn't the Federal Reserve just raise interest rates to combat inflation? Well, some Fed officials have been advocating for that very approach, arguing to keep rates on hold for the remainder of the year. However, this is a delicate balancing act. Raise rates too quickly, and you risk slowing down the economy. Keep them too low, and inflation could spiral out of control. This brings us to another point of concern, the US fiscal approach. The International Monetary Fund has expressed worries about the short-term risks this approach poses to the process of slowing inflation. They argue that the current fiscal approach not only threatens longer-term fiscal and financial stability in the US, but may also push up global funding costs. This could potentially create financial ripples across the world, impacting economies far beyond the US. In essence, the US economy is like a car speeding along the highway. While the speed might be exhilarating, it's essential to keep an eye on the fuel gauge and the engine temperature. Driving too fast for too long can lead to overheating, and we all know what happens when a car overheats. As we can see, the path to economic growth isn't always smooth, with potential risks lurking around the corner. So, what's the key takeaway from the IMF's forecast and its implications for the US and global economy? The IMF's projections paint a picture of an American economy demonstrating impressive resilience and dynamism, outpacing its counterparts in the developed world. The US economy is not just surviving but thriving, with a growth forecast of 2.7% this year, a significant upgrade from previous predictions. This robust performance is largely attributed to strong demand, high productivity, and steady employment growth. However, this isn't simply a tale of unbridled success. While the US economy is firing on all cylinders, it's also grappling with the specter of inflation, a challenge further exacerbated by the economy's overheated state. This raises the stakes for the Federal Reserve, requiring a delicate balancing act between stimulating growth and keeping inflation in check. In comparison, the economic landscape in other parts of the world appears less rosy. The Eurozone, for instance, is predicted to grow by a meager 0.8% this year, hampered by high interest rates and the lingering impact of past energy cost surges. Then there's China and India, the world's second and seventh largest economies respectively, both poised for growth, albeit at different paces. China's economy is forecasted to grow by 4.6%, while India is expected to outpace it with a growth rate of 6.8%. Looking ahead, the road is not without its bumps. The US economy's strong performance could inadvertently heighten global funding costs, posing risk to the global economy's financial stability. Additionally, the US's high government spending and debt levels could potentially fuel inflation, creating further economic turbulence. The future of the US economy looks promising, but caution remains the watchword. As always, a balanced approach that takes into account both growth and potential risks will be key to navigating the road ahead.